more user-friendly resource to use than maybe what we use at MetaTrader for on our software on our PC, which is the typical software that either the broker provides. Depending on what broker you open a broker account with, you download their software, set up your account, and you could do analysis on that particular software as well. But this one is free to use. It's easy on the eyes. A lot of the times the IML educators use this software as well. This platform, just for ease and continuity, especially for those who already taking advantage of IML Academy and taking advantage of the IML TV. We're going to be using this platform pretty much today. So everybody here at least should be pretty familiar with what the chart is, what these candlesticks represents, what the scale on the right represents, what the scale below represents with respect to price and time, and all of that. And to start off, what I'd like to do is touch on, I would say, I want to keep it very simple, meat and bones, as I always call it. I would say two of the most simplest indicators that are available. I think someone is marking up the screen there, so I know if you could yeah, stop all annotations. All right, thanks. All right, so yeah, so getting on to the first set of indicators is, well, the two of them I want to touch on is something called moving averages, and the next one called relative strength index. Right. There's another indicator called the MACD. I won't really touch on that today. We could always touch on that another time, but I believe these two indicators are some of the most easiest to use and pretty much gives us the ability to make some better decisions with respect to what type of trade you want to execute. But like I always say, you have the opportunity to only do two things. Either to do a buy or a sell, right? It doesn't matter what time, once the market is open, we must buy or sell at the right price. So everything that we do is really in an effort to basically confirm that price, but not only to confirm what price we enter the market, but for what reason or what setup is available. Is the market setting up for a potential buy? Is the market setting up for a potential sell, etc., etc.? So so the first indicator I'd like to go on to is the moving average. This particular average is an indicator that one of the most simplest indicators that traders use. That is basically, I could say, as the name says, it looks at past chart information and finds a average price that has happened within a particular period. You have the ability to set that period. So some of the basic periods that traders use are the 20 period, meaning that whatever time frame you're looking at, so like this particular currency I'm looking at right now is AUD USD, hourly time frame. We're seeing 60 here, represents 60 minutes. So to the top left, next to the currency, you'll see 1H, 1 hour. When you use a 20 period moving average, it basically makes an average of the 20 candlesticks, the 20 most recent candlesticks throughout the past, and find averages over that 20 individual candlestick periods. And then, you can have other averages. So for the basic moving averages that traders use are the 20 period, the 50 period, 100 period, and 200 period. So what I'll illustrate here first is basically how we're going to add this moving average to the chart. So when you're using TradingView, you can just right click on the page itself. You go to insert indicator, and to the top you can just type in moving average, and the first option, which is the exponential moving average, right? Moving average exponential, you just select that one, and automatically you would see a line, this line added. So what I'll do, I'll just make some edits there to make it more pronounced. So just click on it, you see all these dots show up. You right click on it, go to format. You're going to change the period to 20. Just going to increase the style and make it a little more pronounced. Right. Right, so that is simply how you add or apply the moving average. And pretty much what you can see is that, while this particular moving average moves along with the market, depending on wherever price action is taking place on either side of the moving average, it could pretty much give you an indication of where, and on a short-term basis, where there will be opportunities to sell and where there will be opportunities to buy. Right, and if you look at this particular, if you look at the chart as how it's progressing, if you go into the past, you realize that I will just use this as a prime example. You're seeing that this particular currency, the USD, is progressively, as it makes higher highs and lower lows, is pretty much kind of bouncing or finding some support on this particular moving average, right? And a lot of the times, when you get this type of action where you're getting higher highs, lower lows, higher highs, lower lows. I mean higher highs, higher lows, as we call it, an uptrending market. It just offers you a pictorial image of where it's finding some support. So along these areas, you may have some areas where you could enter for some short-term buys. Also, a lot of the times when trends change, you would see that, like in this example, where I could draw, let me see if I could draw a trend line, where I have this blue line. You would realize that at this particular point in time, when you had all these candlesticks that basically turned bearish, some long red candlesticks, after it broke past the moving average, and it basically started having price action below, start making lower highs and lower lows. When you see these kind of candlestick movements in the market where it breaks lower than your moving average, you have the ability, it's a good time that it's indicating that you can actually enter on a sell, right? So if you look at this particular, if you found the chart at this particular time in the market where everything that is happening from the right move forward was not there, this was the actual market at the moment, and you found that you got this strong bearish price action, meaning that you got these long red candlesticks, these nice bearish candlesticks that broke past or broke lower or broke below your moving average, it's really a strong indication that you have a nice interim or opportunity to basically sell, to do a sell trade. And conversely, just like in this particular at this point, when it reached this low, see if I could draw the trend line from here to here. Let me see if I can insert. So you see, right around here, where I draw this ellipse here. And so after it broke your moving average to the top here, it basically had some strong bearish movement lower. It stayed pretty much under and found an area of resistance. So found some resistance under your moving average. And only after it broke past, it had a strong bullish candlestick. Anywhere along this line, at this point of the break of your moving average, you had the opportunity where or indication that you had a nice uptrend coming, and you pretty much could have stayed with this particular trade, having multiple opportunities to do buys because of the strong break in your moving average, right? So this is just using the 20-period average. So you had a lot of opportunities to do buys along the way because you're getting some nice movement where the market now is found a new trend, is uptrending, making higher highs and higher lows, and it's pretty much finding some support on your moving average, right? So just like in recency here, in the recent past, sometime during this week here, you would have seen that they would have had a double top. This was around, I believe, the 8th of the 9th, the 9th of the 8th, which was a few days ago, and you got a nice strong break of of your moving average, which basically was a short-term indication of a change in direction or bearish momentum in the market, and you practically could have entered anywhere around this area. Just like I put in just a shape here just to add in. You could have entered anywhere around this area after seeing that strong break of your moving average and practically had the opportunity to sell by simply doing that. Right? That is just a simple thing. The thing about moving averages is that it is not something predictive. It is not something that has the ability to give you any foresight so much in the market. But when you understand how to properly use it, and you look at the information, the data that is presently being shown to you, you know where the trend will be in this particular moment or this period in time. So like you would have seen recently, you know, you'd have seen some little choppy movement here in the recent past. Some, you know, this is some consolidation taking place. And if you look closely, you would have seen, you know, sometimes one of the things that we taught as well is something called trading triangles. We're not really going to touch on that today, but you know, you would have seen something where you have an area of resistance, and you have, you know, a lot of the times you would see these kind of formations taking place just around these levels, especially on the moving averages, as well adds a layer of confirmation to what you're looking for. And you'd have seen that it basically found this area where it was, you know, consolidating, and at one point, this is we call this a fallen triangle, where it found some, you know, it basically formed this conical shape and consolidated until it finally broke out. And the nice thing about it as well, it actually broke out underneath your moving average. So having seen that, you now know on the short term, in a short term basis, or on an intraday perspective, you know, those are the persons who like to trade 60 minutes, 1 hour time frames, half an hour time frames. You now have the ability with just this simple break of this this pattern, this triangle, or this break of this moving average. All this basically shows you that there's a bearish direction change in the market itself, and you pretty much could now start looking for opportunities to sell, look for more opportunities to sell in this particular market, right? And that is as simple as it goes. When you look at the other moving averages, the first one I spoke about was the 20 period. The other one that a lot of traders like to use is something called the 50 period as well. So you just pretty much, you know, once you click on it, it's highlighted. You go to format, you change the one inputs, and you basically change the period that you want. So if you want a 50 period, it will adjust accordingly. So, you know, depending on whichever one, I pretty much like to use anywhere between 20 and the 50 period for those who are more short-term traders. You know, depending on your style, if it is that you just like to get into the market, if you could find a quick opportunity to enter some trades and make some easy profits, you know, this is a good indicator that you could use, and you could pretty much see, you know, why I said that. Because what, you know, look at a 50-day period, it has kind of gotten a little larger, and where you're seeing areas where in the past, in recent past, the market was finding some nice levels of support. You know, all these areas here, or nice levels of support. Right, all these areas or nice levels of support, where you could pretty much, every time you see the market impulse up, let's say this is we already could identify this is an uptrending market at this particular period in time. Why? Because they're getting a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So it's a definite uptrend. So now, having your market break your moving average and basically rise above it, it basically retraced a bit, retested, and multiple times into the future, you're having some successful retests or some successful support finding support on your moving average. And it's only until there was a shift in momentum, as we call it, or a break of your moving average, which was in this area, as you can zoom in a little bit, where now you realize that the bearish momentum that was found broke your moving average. Now we could see that there's a switch in the direction of the market, or a switch in the trend. Now you're going to find some opportunities to get some sells in. All right, so as you increase the moving average, it's all based on what particular style of trading you are. If it is that, you know, you like to use 1 hour 30 minutes, you know, these moving averages are pretty much work for you. If you're more long term, you like to use 4 hour daily, you know, just to have a more long term perspective of what the market doing. A lot of the times, the higher moving averages really give you some strong indications of what will take place in the market. So, you know, so as this one, I changed this one to 100 period. So basically, I went from 20 to 50 to 100, and you could pretty much see, you know, that depending on which one you use with respect to the time frame, you're getting some real strong confirmations of entries. Simply, all you're waiting for is either wherever your market price is to successfully break that moving average. Basically, it broke that moving average and head lower on a bearish move. Once it broke, you know now that a short term there will be a continuous momentum of a bearish pattern. You're looking for opportunities to sell. So if you know your market price or your market action is below your moving average and it breaks to the upside, now you're gonna see if you're gonna get some areas of support or retest on your moving average, where you're pretty much already identifying some key areas you could re-enter for buys. And these really work when trend changes happen, right? Because as you would see, this was a low area here. If you look at it as a level of support, you just take a horizontal line, right? You can see this area was a strong level of support at this point here. And after in recent past, it basically bounced off this level, it went higher, it pulled back, it rested at this level of support again. And after we got this strong break to the upside above our moving average, this was the sweet spot. These are the entry points I like to enter, or I like to find where I can have moves, moving into days on end, where you can find the entire move. And moving averages really help in times like these, when you have, like we say in forex, we looking to buy opportunities or buy low and sell high. I know this if you found the market at this particular place, once you have established this as a level of support, you have identified that your market has broken over your moving average, it is practically found some support on it. That there, right there, is a simple confirmation of an opportunity for you to enter the market, right? So anywhere between the 50, 20, 50 to 100 is a good place to be. You could always draw it on you could change the values, change the periods based on whatever chart you might be using, that at least would give you what I like to call a perfect fit. For whatever the reason, that particular moving average seems to have some confluence, as we say, or seems to have some connection to the actual movement of the market. So the last one is just the 200. So this one is just more long term. It's pretty simple to do. You just do the same thing, change to 200. All right. Right. So let's delete this. All right. So like if you happen to go on a higher time frame, a lot of traders who are swing traders, or who do long term trading, it really gives individuals a nice long term look to see, well, all right, if you were looking at this from a daily perspective and you found the market at the right place, on a daily time frame, once you get a strong break of this particular moving average, it's a sure deal that you're going to have a very strong move to the upside. You're going to have a very strong opportunity to get some buys in, to basically profit from this incoming trend. Right, and with everything, we always respect the structure of the market. Not just because it crosses, it means that when it returns, it crosses this. If I zoom in a little bit, you saw that it crossed. It basically broke past. All these candlesticks represent daily time frames. Over a 4-day period, it finally broke it. It closed a strong bullish candlestick above it, and you had multiple opportunities during this period where you could have entered on buys and basically trade with the trend. As you say, trading with the trend is the easiest thing you could do. As you say, the trend is your friend. So this is a simple confirmation of opportunities to do a buy, right? And if you look just right here in the immediate past, you may have seen this strong move up. It broke past your moving average, and you would have gotten some opportunities to enter. You may have gotten some opportunities. You would have seen it basically retraced back, found some support, it moved up again, and progressively over time it eventually broke. So this is not really an indication to show that you would get that same kind of movement like what we got here. We got the strong, after it broke, we got a strong move up to the upside. We pretty much could have captured a lot of pips over some days. And in this case, which is in recent history here, in recent past, we got a nice break, but it gave a small make a small retest, and then it just made a short move up. Right. So if you actually measure this movement, this may make the experience of finding short-term opportunities a lot better, because this movement could represent, if you had bought, about 248 pips, right? This small little movement here, right? So that is one of the nice things about when you use some of these simple indicators, and it really gives you another way of seeing support and resistance. So normally we would get into that as just to add again for the stuff that you would be seeing of drawing support and resistance lines on a horizontal lines. The moving average is something that is moving with the market. So you would find that however price moves in the market, these are pretty much some strong indications of areas of support and areas of resistance, right? So even while you're looking at this, you might see this is a very short move in comparison to this, but this move right here was 248 pips, right? If you had waited for this break here, and it got in and it exited at the high, you'd have been able to catch 500 pips, 558 pips, right? By simply just being patient. So remember, this is a daily time frame, and swing traders, I have transitioned into that, where I look for opportunities like these to practically look where I could find long-term positions that I could enter into now and compound on it over time. So every opportunity that I get to re-enter on the buy, I re-enter on the buy. Trading with the trend. And this is a very helpful tool, one of the helpful tools that you can use to add some additional layers to the analysis that you already do. Right? So that's pretty much it as far as the moving average. If there's anything anyone wants to ask or anything, they could feel free to do so. And maybe if it's anything concerning how to add it to the chart, or how to adjust the periods, you could ask, or whatever the case is, and you could always revisit that. And the last one, or the last indicator that I would like to touch on, is something that we call the okay, I see it in the chat here. Yeah, so that's pretty much it, Maurice. So these we try to be as predictive as possible, because what we're really doing is looking for opportunities to trade what the market is showing us. Right? We can't really, there's nothing about the market we can do. We don't move the market. We are just day traders. We are just looking for opportunities to make some money. And all we can do is use the tools necessary to give us the type of confirmations to respect what the market is doing, so that we could be more precise. All these tools add more precision in the entries that we make, because that's all Forex is really. When you really look at it at the basics of it, all that you're going to learn is to help you to confirm an entry, right? And by simply allowing the market to do its thing, you now know that you have the ability. I'm seeing some annotations there again, so I don't know if you could somebody's drawing on the screen. Yeah, all right. So yeah, so just like I said, it will make your analysis a lot more sound with respect to the moving averages that you use. So you have the 20 period, the 50 period, the 100 period, and the 200 period. I pretty much use the 20 for more short-term, 1 hour, 30-minute type analysis, and for long-term stuff, I would use the 100 period or the 200 period. The 100 period is pretty good, depending on what chart that you're using. So you for yourself can basically add it to your chart, adjust the time frames and see how they line up, and it will give you a good ability to be a little more precise with what you do. So the next thing we're going to move on to is what I like to call the RSI, the Relative Strength Index. And this particular index, or it's called an oscillator, all this pretty much does is it gives you the ability to have a look and see what the momentum in the market is, or what the volumes are in the market, or what or when a market is overbought or oversold. Meaning that whenever this particular oscillator or this indicator was developed, it basically gives you a range in which, when you see the market which is above this range, start looking for opportunities to sell, or when it falls below this range, when it falls below this range or termed oversold, you have the opportunity to enter to look for some buying opportunities or look for opportunities to buy. If any of you may use the online Harmonic web scanner, that scanner has the RSI on it as well, right? And you know, that is one of the ways people could incorporate that simple tool on the online web scanner to basically help them, you know, be a little more precise with respect to when they enter in that predicted or that prediction via the Harmonic scanner with respect to whatever trade. So to add it to the chart, just right click on any area, click on insert indicator, and in the search bar to the top, just type in relative, and you'll see the relative strength index. All right, so when you click on it, it should pop up on the screen. So pretty much, let's bring it down a bit. I'll go back down to a 1 hour time frame. Here's shown how do you know whether the market will continue to drive if it crosses on the moving average on a sell trade. Right, so that's why. All right, so that's a nice question. So with respect to how would you know, right? So with how would you know, is pretty much you have to respect the structure of the market and look at what the market is actually doing. And in a situation where we have that change, or let's say we have a moving average that has been broken, and it has a bearish momentum. A lot of the times, what I do to incorporate or add additional information to that is something like this. This is pretty much what I'm going into the RSI. So I would just like to touch on that a little bit before I could show you exactly how it kind of coordinates and how you will be able to see that when you get that break, whether to the upside or to the low side with respect to moving average, you know, using sometimes these additional indicators makes your determination of where the trend is going to be long term a lot stronger. Right? So, you know, like I said, the moving average is something that is not predictive. After it breaks, there's no indication or there's no ability for you to know how much pips lower, how much pips higher. But when it is you understand and respect the structure of the market, you do your overall analysis, you know, you can have a little more outlook or a different approach with respect to where you want to take your profits or what price that you want to exit the market at with respect to, you know, securing profits and that kind of stuff. So with respect to the RSI, once you add it to the chart, it pretty much does, as you would see here. Let me see if I could change up the colors a bit just to make more sense of it. Where, right, so that's purple. Wrong thing. Format. All right. So style. Upper band is red. Lower band is red. Okay. So the theory behind it is that where you see these red dashed lines, there's a range between 0 to 100, right? And anytime the market goes above the first line, this first dashed horizontal line represents 70. If you look on the scale, you would see 70, and if you look below, you would see the lower one is 30. So this is just part of the theory. This is as has been identified by this oscillator. Every time the market pretty much rises above this 70 level, it represents an area of being oversold. I mean overbought, meaning that the buyers are at this point are looking to exit the market. So when anytime the market is overbought or your price action has moved into the zone, it's pretty much setting up an opportunity where you can look for opportunity to sell. And you can see right here, while this simple indicator, while it showed that it entered overbought territory right at this area here, you would have seen that just as the RSI indicator indicated, we now have a strong downtrending market forming, meaning that right at the top here, pretty much around the same area where your let me see if I could draw a vertical line. Format. Let's broaden it a bit and turn it into red. So I'll just use this as to kind of show you guys where this red vertical line is. It pretty much kind of matches up with when the market reached this overbought territory. And as indicated, based on the application of this particular indicator, you found this was a perfect area where you had the opportunity to look for a selling opportunity. And what happened is so that the indicator fell lower after it reached this high, it fell lower. It fell underneath, just underneath that the 70 level, and we just kind of consolidated a little bit. It just retraced a little bit. And if you look at the actual action of the market, you would have realized that it kind of followed similar fashion. It found a high, it fell a little bit, it pulled back like a small retracement. And having done that, you know, this was an area where you could have entered a sell. And pretty much since whatever day this was I believe the 9th of the 8th, right? You could have entered a sell and you would have been pretty much from that day to now, pretty much about 130 pips in profit, right? At best 100 and maybe 140 at this low here. So, you know, using that indicator, this RSI is a much more a very strong indicator as well. That is a little more accurate or a little more current with respect to the territory. So anytime you see the market has reached this particular zone where it has been overbought, you know, you're looking for opportunities to sell, right? Pretty much when there's areas in the market where, just like in the recent past here, let's see if I can remove this, take this. Insert. Right, so this is the area here where the market, you know, was slightly in oversold territory. So this pretty much aligned with around this zone here. Insert horizontal line, vertical line. Right, so you pretty much had an area where it entered oversold territory, right? And since then, you know, if you had, you know, it was an oversold territory where the market had just dropped below the 30 line, the 30 level, then it progressively pushed back up a bit. And when it pushed back up a bit, it made a small retracement, and you know, this was really the perfect time or the perfect price representation of price. This represents how price is moving. So at the market, you had that particular area where you could have entered, and pretty much for the next progressively over the next few days, yet again, you had the ability to find a very nice, strong uptrending market from this level, right? From this area, and a very strong uptrending market, right? Very strong. So you could have had multiple entries along this trend line by simply just using this RSI as an indicator, meaning that where I drew this long vertical red line, there's all this information to the right has not happened yet. So while you're looking at the RSI, you saw that it reached oversold territory. It decided to come back within the range, the 70 to 30 range. And when you saw that it fell, you basically retraced. You know, it gave you a very nice opportunity to re-enter for a buying opportunity, and you had the opportunity to catch pretty much anywhere from pretty much about 245 pips, right? That would have taken some hours, some days, but you know, that is when you have the ability to find it at the right time. I'm seeing a little more drawing on the screen, so I don't know if you could just clear the screen. Or just take off the annotations. I saw some blue line came up on the screen there. Anyhow, so so that is one way, or simply how to use the RSI, or how to allow the RSI to show you what's happening. And one of the things that the RSI allows you to see is something that we call divergence. And what do I mean by that? By simply using trend lines, we already identified that this point here, at this area here where the market is oversold, we saw that it started making a small uptrend. This is pretty much like a very small uptrend, right? This area here. Right? So this is a nice little uptrend. There's this previous low, it made that high, then made a higher low, and continuously like that, right? And you would have seen actually in the market was actually making a small downtrend here. So what you start realizing is that when you start comparing where this RSI is indicating that you're in oversold territory, starting to make a slight uptrend, and when you look at what the market is actually doing, it is still having a small downtrend. You call this area, or we call it divergence, meaning that the market is not moving at this particular point in time or at this particular price. The market is not moving together. It is not while the market is uptrending, the RSI is not uptrending. While the RSI is uptrending here, you find that the market here is downtrending. So when you see this action where they're diverging from one another, they're not following the same direction. And what I mean by that, you could draw a simple line here where you draw another trend line from all the highs here going up. See if I can move this around, right? So you draw all the highs here, and if you look over the same time period, you'd have pretty much seen the same thing. The RSI is showing you that the market is uptrending. It is making higher highs as it goes. So you find that there's some familiarity, some similarity between the two. You have the relative strength index making higher highs, and you have been a strong upward movement of higher highs here. But at this particular time, when the RSI, as we said, reach oversold territory, you start seeing that the movement of the markets, the movement of the indicator, and the movement of the price in the market started diverging from one another, right? Or if you want to call it converging, basically kind of making this like this triangular shape, but heading towards, heading in opposite direction. So that is what, anytime you hear the word convergence or divergence, that is all that represents. So in this case, they are having movement away from one another. And this as well, just this simple indication with respect to the market being overbought, oversold in this example. All this as well is a little indicator of where or strengthening your position of looking for a buy opportunity, right? And that is pretty much how we use the RSI. Simple. It's very simple to use, very easy to set up. Once it is, you add it on. You have your 70 level at the top, your 30 level below, and all these areas is where you look at the graph. So sometimes it works on different time frames. Like if you look at this particular chart on a daily time frame, you would have seen that on a long-term basis with this particular chart. So this is current information, AUD USD daily time frame. You could have pretty much seen, if you look at if you draw a trend line, that you had a successful uptrend in market for some time now, right? You could identify that. You could successfully identify that AUD USD has been uptrending. But what we are seeing now is that when you look at the RSI, you see here we have some successful uptrending too. But at this point, when the market is now overbought, what we starting to see now? What we're starting to see is that even though this portion of the market is still uptrending, we're starting to see a downtrend being formed here, right? Because what? After being in overbought territory, it decided to break lower, came back up and retested, came back up and almost approached the 70 level, created a lower high. While this went from a high, lower high, higher high, and this went from high to lower low to lower high. Simply by drawing these trend lines at the peaks, you're getting an indication that this is a strong indication of a sell. So for me personally, as a swing trader, I like to see that, because when I look at the market as it's structured right now, I can see a particular uptrend happening. I know over the next coming days, right? Over the next coming days, if I decide to just draw the particular this particular channel that the market is in, you can see pretty much you have a nice uptrend forming, and I have potentially all this clear space to look forward to, right? This is a nice indication that the trend of the market, while this entire AUD/USD market is uptrending long term, it has reached a point where it has reached its high, and now, based on previous action in the past, just like here, it made this top, it retraced a bit, it made another top and decided to sell off. We say we look left over right. And I am looking forward to having opportunities at this level to continuously sell. And this could potentially be, if you look at it from where price is now, the potentially where it could fall about 300 pips, right? It's as simple as that. Where the RSI now, if you look at it in this particular example, AUD/USD on a longer time frame, you're having a nice strong uptrend at this particular point in time. So you would look at it and say, what, this is uptrending market. But when you look at the relative strength index, you're actually seeing that the high, which was in the overbought territory, broke your 70 level, pulled back a bit, is starting to make lower highs. So they are diverging away from one another. They are choosing two different paths. So while the actual price chart is reflecting higher movement, the RSI reflecting lower movement, this is a nice indication of a change in direction in the market. And that's by simply looking at it long term, I know, well, all right, this is even though this is an uptrending market, all this is indicating that there is a short-term change with respect to this present uptrend, or a correction in this uptrend. Right, so you had this long upward move, and now the market is finally deciding, or finally reaching a point where it's ready to start correcting. Right, so that is simply how we could start applying the relative strength index as an indicator, depending on what level that you watch at, to give you more determination. So now looking at this from a long-term perspective, looking at the AUD/USD potentially into the future, is changing trend in a bearish direction. Now I want to trade and capitalize on opportunities trading with the trend. I don't want to trade against the trend because it makes life easy. Right? So even though we know short term, right, we know short term that we have a uptrending market. We know short term we have an uptrending market. We know potentially we can have the ability to enter this particular trade. We have this is pretty much like a channel where you're seeing a nice channel where price is pretty much bouncing along. So when it reaches this high, this particular area, you have an area to sell. It made a double bottom here. You had opportunities to buy, opportunity to sell. It's making a double top, pretty much like what happened in the past. So I'm pretty much looking forward to the opportunity for this move to complete the gap, this empty white space in here. So as seen in the chart, they say if you enter a trend, when it changes, you would stay in for days or get in and back out of the trades with using these indicators to help out. Right. So what I like to do is that when it is enter the trade at the right time, I pretty much enter multiple trades. I may enter like 2 to 3 trades with respect to whatever risk I'm using. Once I find the best entry, and what I mean by that is that when it is you can find an entry at the high for looking for a sell, at the best high looking for a sell, or the best low looking for an opportunity to buy, while the market moves in your favor, and over time as it progresses into other days into the future, if it decides to retrace a bit or to pull back a bit, I would re-enter on the retracement. So what I mean by that is that if I zoom in a little lower here within this channel, let's see. Right, so this has been uptrending for the last how many days, right? And if I had an opportunity, looking at having drawn up this trend line, to find an opportunity to buy here, or an opportunity to buy here. right? An opportunity to buy here. This was like the sweet spot. You have a nice double bottom. Now, if I entered at this area, you know, I've been able to secure, and as time move along, I entered and I was able to secure at this high here about 266 pips. But what ended up progressively happening, market made a move up, and then the market decided to make a short move back down. Right? It made a small retracement or a small pullback. Right? So me looking at this particular retracement, I am not worried or anything, knowing that I entered at the right time. So I see this as another opportunity to enter on a buy again. So I've entered at this area. So then it decided to move up. It made a small retracement. It made a small pullback. Mind you, when I entered at this level, I already had 2 or 3 trades open. So all this way up, I'm in profit. Even though it pulled back a little bit, I entered again and moved up in some profit. It pulled back a little bit again, I can enter again. Right? So it's all depending on you know, what are you aiming to do or what you think is best for you. For me, you know, the best position that I could find at the high or at a low, you know, a high to do a sell or a low to do a buy, I pretty much try to focus on that, and I would try to enter at the appropriate risk and the amount of trades necessary to try and capture the entire move to the upside, right? Because even though we are projecting, all that we're doing here is projection, right? You know, simply using the RSI, we have identified that the AUD USD is looking, based on what is set up, to be making a turn to a new low. It's moving from this high to a new low. So within all this space, we have no idea how low it will drop, how far it will drop, how many movements, you know, how many movements up or down. You know, like we said, the market doesn't move in straight lines, it moves in like steps. You know, so we really don't know. But, you know, based on what we are seeing with this RSI, this is a very, very strong confirmation that there's a trend change, right? Even though it's a trend change in the direction or a correction in this uptrend. So even look right here in recent past, you saw you met this high, and you might have seen this, you know, looking at the chart in the past and say, you know what, right, this has been uptrending. You know, anytime it hit the area, hit this higher part of the channel, this was an opportunity to sell. You decided to enter and sell. You know, you would have been able to secure a lot of pips, but for whatever reason, you know, however price moved in the market, the market decided to make a last rally up or a last push up, and depending on where you might have put your stop loss, you know, you might have been, this is for long term, right? Because remember, this chart is pretty much over days. This is days, so every candlestick represents days. So this is pretty much, this time frame could be almost a month I'm talking about here, right? But, you know, if depending on if you had entered at a particular level and you realize that, you know, the market made one more rally up and made a new high, and it could have pretty much stopped you out of your trade, right? But if you just executed some patience, you wait for the setup, you look at the indicator, you realize, okay, even though we having a nice uptrend, the RSI is showing that some momentum or a shift is taking place with respect to the direction of the indicator. So now you're looking for opportunity to sell. So for the minute, if you watch it, you see you get a nice retracement, it move from overbought, move back into the range, you get a rally up, your last rally up came as close as possible to the 70 level, and that is like a zone where you're looking for your sweet spot to say, all right, anywhere around this area, I am comfortable doing a sell. You know what I mean? And you know, that is how you would basically approach applying it, regardless of whatever time frame you're looking at. Right? So it really helps a lot. Makes life a bit easier with respect to making a more informed decision with respect to what trading opportunity or what trade you would like to take advantage of. So that's pretty much it. As far as, let's see on the screen, remove all drawing tools. Right. So even if you come down on a hourly time frame, you know, even though you're getting some what we would consider oversold territory, having seen the market from a long-term perspective, knowing that AUD USD progressively is going to be bearish into the coming days moving forward and from this trading week into the next trading week, I know that this indication of a opportunity to buy is just pretty much what I would like to call a retracement, meaning that this is just a small pullback to continue on a sell, right? So I think this is a good way to segue into just the last part of it. I don't want to keep too much of everyone's time, but we could pretty much use this particular chart to touch on the 4 key indications, where by simply drawing that what we call support resistance lines, identifying the trend, you're looking for a price reversal zone, and you're waiting for a pullback, or you're waiting for a retracement. When these 4 indicators or these 4 indications align, it gives you a very strong indication of what particular trade you're going to enter, right? And this particular technique really works on intraday perspective or hourly, half-hour time frame, right? Where you have the ability to identify particular levels in the market of areas of support, areas of resistance, and based on identifying particular zones to enter and waiting for the market to enter these zones, it already give you an indication of when to do a buy or when to do a sell. So that's in that perspective. As we took that kind of top-down analysis, we look at AUD USD from a long-term perspective. We are seeing that, all right, seems there's a shift in momentum here now. We're expecting some bearish movement into the coming days, into the near future. So when it comes down to our time frame, the 4 key confirmations is what will help you really focus to get a proper entry where the sell is concerned, where a sell is concerned, right? Because this market, like we said, is going to be forming a new downtrend. So we're looking for opportunity to sell with the trend. We're not going to try to go against the trend. So in simply identifying levels of support and resistance is pretty easy. So anytime you identify an area of resistance, you're looking at an area in the market where price has respected for whatever the reason, but it cannot break past, right? Whatever the reason, it's always resistance, you would say, at the nearest high, and support is at the nearest low, right? So just by simply watching the chart, I could pretty much see that we had some strong areas of what I like to call support and resistance, right? And why? Because if you look at the recent past, right here, this is a good area, right? You would have seen that in the recent past, while the market was below, approaching or moving upwards, it practically had some areas around this price level where it basically rejected about 4 times. So you have these 4 peaks here. So anytime you see that kind of price action or candlesticks hitting a particular price and rejecting, hitting that price and rejecting, hitting that price and rejecting, this is what we would consider a strong area of resistance, right? And it's only until we get a nice strong breakout of these areas is when we start looking for opportunities to see where the market might be heading in a particular direction, right? And looking at how the market is set up right now, we have already identified a particular high in the recent past, and we could pretty much say which was this level here, this second level, which was a level of support, what has been broken, right? Simply even looking back at what we saw with the RSI, seeing that there's a new trend happening, we could pretty much use your trend line and join these peaks, and you would see that you're forming a downtrend, right? So what we're doing here is practically identifying the trend. Right, so we have a downtrend being created. So having identified this downtrend, having identified a particular level of support, what I could do, I could change the color to maybe make it a little more approachable. I could turn it into green. So let's say green is support and red is resistance, right? Format, red is resistance, right? So this was one level at the area of of resistance. This is a resting place, a area of support. Basically, an area where the market has found, as the word says, some support or area of rest. Sometimes they call it a floor or a ceiling. So if you hear the word floor, represents an area of support. If you hear the word ceiling, represents an area of resistance. So now, as we have identified the trend that is happening in the moment, we have identified a level of resistance, a level of support. The thing that we are waiting for is for this level of support or resistance to be broken. So in our case, what we had is that which was once the level of support has been broken, right? Since it has been broken, we would consider it an area of newfound resistance, right? So basically the market switch on us. So you had this nice break here where you had this strong downtrend. Right, you had this nice strong downtrend. So after having identified this was a level of support previously, it has been broken, it has now become resistance. So you already identified a downtrend, it's a downtrending market. You identified a level of support that has now become resistance because it was broken. And pretty much what we are looking for is we are looking to see what price action was like in the past to identify a zone where we could look for an entry. To do what? Enter on a sell. And if you look in the recent past, right, there's a little tool here where you could draw a rectangle. I believe it's this one. Right, if you look at the recent past, you would realize that pretty much what I like to do is I like to take the body of the candlestick. I would look in the past to see where it just to the top. Let me see if I could zoom in a bit. Yeah, you see just to the top. All right, let me see if I could remove this remove. Right, I just remove the RSI for a bit, right? So what I did is I look at how price basically what has been had in the past, rejected this particular area which was an area of resistance. In the past it broke it and then turned into an area of support. So you found that the market was just chopping around, respecting this level. And having seen this kind of price action, this has confirmed to me that they see all these areas where you're seeing these, just the candlestick body just above the resistance line, all these wicks, has basically given me a zone or area where I'm comfortable whenever the market decides to re-enter or to pull back in this particular zone, anywhere within the zone. This is where I am going to be looking for an opportunity to re-enter the market on a sell. Right? So that is pretty much it. So you already identify a level of support which has now become resistance because it was broken. You already identify your trend. This is a downtrending market. And also looking at what has happened in the past with this level of support which has become resistance, you have found that many times in the past price had tried to break past the area and found a lot of resistance here. It finally broke past, then it found some support and finally broke past again. So right here is a perfect setup where personally someone may come to this particular chart and look at what the market is doing right now and say, what, I'm going to enter a sell. I'm going to do a sell. When they decide to jump in on the sell, the market move back on them and stop them out. When all you have to do was wait to see the market come back within this zone, and you have the perfect opportunity to look for opportunity to sell. Right? Let's see if I could just draw in, insert, ellipse. Format, so I could change this blue. Oh, sorry. Let's see if I could use a lighter blue. Alright, so that is a particular zone. You have a nice area of support. This level was an area of resistance in the past. It was broken, it became support. It got broken again in recent past. Now, since this level of support has become an area of resistance, what I would be waiting for is to see the market make a pullback. So we have a level of support that became resistance. Yes, we have identified the trend. Yes, it's a downtrending market. We have practically identified a zone, or what we call a price reversal zone, a zone where price has pretty much moved around, generally where it has rejected either at a level of resistance or a level of support. We have that, and now we are waiting for the pullback. Once we get that pullback, as soon as we get the pullback into this zone, this is a perfect opportunity to sell, right? Right. So I think what you're indicating based on the question that you ask is, let me see if I could check it back. You're saying that, where's this chat boy? Okay, so you're saying that if you're busy and may not be able to watch it, you could end their sell stop in that area. Right. So that's a great answer, Davon. And you're gonna do a sell limit, right? Sell limit, meaning that your entry is above where your market price is right now. Once your entry, you have identified an area or a zone or a particular price you would like to enter, that is above your market price, where the market is actually is, you're going to do a sell limit. So like I always like to tell people, it's almost like you take a ball and you throw it up at the ceiling. As it hits the ceiling, it will just come all the way back down, right? Like gravity. It's almost like anything that goes up must come down. So this is what a sell limit is. So if you wanted to do a sell stop, you may want to set a sell stop at this area, right? And this I wouldn't recommend doing that, but if it is you're expecting the market to continue lower, a sell stop would be here, where your entry is lower than where the market price is. So in this example, a sell limit is the perfect thing, right? So for me, based on what I've learned, based on based on what we have seen in the market, this is one of the perfect examples of people will see this nice, strong, bearish move down, and they will jump in and say, you know what, nice, this is a nice opportunity for a sell. But personally, I would execute patience, wait to see the market make a retracement, and once it enters this area, then I would look for the sell, because you would realize that pretty much you may get a very, very, very strong move to the downside from this area, and that's how you're trading. You're trading with the trend. You don't want to trade against the trend. You don't want to enter at the wrong time. You have it right. You're looking for the sell. Right, it's set up to do a sell, but you entered at the wrong price. If you just had waited a little bit, or you wait a little bit, execute some patience, you have been able to enter at this higher level and catch the entire move, instead of entering here, experiencing, let me see how many pips is that. So let's say if you decided to do a sell from here, you might have had 35 pips in drawdown. You might have set a stop loss 30 pips above. You say, you know what, market execution, put a stop loss, sell. You see yourself in some small profits, and then in an hour or two, you come back and see, bam, the market decides to push back up, right? And I believe tonight is a night where we have some news. If I am not mistaken, you're supposed to have some news like 9 o'clock or something like that for the Australian market. I'm not sure if you've seen the Australian market. There's news from 9:30, somewhere around there. So, and a lot of the times these things line up when events like this happen, or let me see. Okay, then cool. Yeah, no problem, Andrew. So yeah, so that's just way to understand exactly. Once you understand the different trade, the different ways to execute a trade, you will use whichever one with respect to what your entry is and where price in the market actually is. So as a reminder for everybody, once the entry is above where market price is and you're looking for opportunity to sell limit is your friend. So you have the ability to do a pending order, just put in a sell limit, apply the risk as normal, and 30 pips above this zone, you could safely put your stop loss. Because based on what you have seen in the past, you have seen price has been rejected here many times in the past. At one point in time as resistance, at one point in time as support. So you are more confident here as a nice zone to enter for a further move to the downside. Yeah, AUD news at 9:30, right? So that is particularly it. So you would be shocked to see that whatever happens with the news, there might be a strong impulse up. The news will push this up, it will come into the zone and come down. So I wouldn't be shocked if that happens, right? So like I said, all that we're doing here is projection But a lot of the times, these things always line up when events take place, or there is news events, or whatever the case might be, where something takes place. So, this is just a simple example of it. So, just to get into it, if just to revisit, if there's, I know a lot of people, sometimes what they have a hard time doing is identifying support and resistance. Identifying levels of support and resistance. I could just take some time maybe to just go through that a little more. For all the persons, obviously, like I said, we're not trying to reinvent the wheel, because in the IML Academy, there's in the back office, the technical analysis pretty much takes you through all the 4 key confirmations, each one separately. What is a price reversal zone? What is the trend? What is support and resistance? What is your pullback? And the different ways to trade using this particular technique. So, it's really a help when it is you identify these key levels, when you could look for strong areas of support and resistance, right? And basically use whichever time frame is best to you, whichever time frame you're comfortable using, to really give you a little more guidance with respect to what type of trade that you want to enter, right? So we have many ways to confirm that this is a nice, strong, downtrending market, right? We have many ways to confirm that. We use the RSI. The RSI, based on a daily time frame, show us in a long-term perspective, we're expecting a change to happen. We're expecting this bearish direction to happen. If you look at it from a forward time frame, and you decide to draw a trend line going with the uptrend, you would see that you had all these areas in the past where price respected a simple trend line. Right, you had a simple trend line. All these areas in the past where price has respected. Right, and every time it touches the trend line in the recent past, so just thereabouts, it always continued its bullish direction. But anytime you get nice strong closes like these, you see when you see how this candlestick is long red candlestick and actually closes outside your trend line, this and all is a simple indication that the trend is about to change. Right? Sometimes you get fake outs, like what happened here, where the market broke out a little bit, pull back, push out, and then end up coming back in, right? But just on what we saw with the RSI, I am pretty much confident that the continuation of this AUD USD trend in the short term, or into the upcoming trading week, into the future trading days, would be bearish moving forward. And after having done or applied the simple or 4 key confirmations on an hourly time frame, we are able to pretty much see that if we are going to capitalize on the sell or the next move to continue in this bearish direction, we should pretty much wait, right? Execute some patience. You already identify a level of resistance. Let me see, insert horizontal line. Find your resistance. Already identify the trend. Downtrending market. Pretty much I have seen a zone here where price has respected many times in the past. Once I see that pullback into the zone, then I'm going to be looking for a nice strong trend, a nice strong sell. And also by simply doing some of these simple things, like I always say, then when you get the confidence with the trade, you can start using lot sizes that you may not be confident to use right now, because you simply look at what the market has done, you apply some simple techniques, and you get it to make it happen, right? So just before, I think before I can spend the last 10 minutes just kind of maybe just going through and showing you, giving you more examples of where areas of support and resistance has been identified and was broken. So remove all drawing tools. Right. So from an hourly perspective, if you look at the past, all right, so we're coming down from the past here, all right? So let's say we have identified here as a level of support. All right, so let me see if I can change this format. All right, I will add in the next line first and then change the color. This is a level of resistance, just right in this intermediary. So everything within this range here, everything that has happened after the range, just imagine like it never happened, right? All right, so we have an area of support, an area of resistance. So we found the market particularly, or at this particular point in time, at this price, pretty much establishing an area of resistance and support. So again, we identified area of resistance, an area of support, and what happened? Progressively as time moved on, it actually broke it. It broke a level of resistance. Now resistance has become a newfound level of support. So I'm just moving it up to show you what I mean. Right? Resistance has become a new level of support. And it did pretty much the very same thing we are looking for. Meaning that after it broke, it came back and retested. If you look at the past, you will see that right in this area, if you draw a rectangle, you can see right in this particular area, these are areas where, let's see, delete, rectangle. These are pretty much areas in the past where price has respected. Right? We have some areas right here in the past, in recent past, where price has respected. This was once an area of support. It broke, it became an area of resistance. It formed a new level of support below. It happened to break this level of resistance. It now became support. And now we have a first indication of an opportunity to do a buy. Right? And we're doing pretty much the same thing again. And that's why, having done that, if it come down into this time frame, now you have found a new high. Let's see if I can remove this. Right, so you have a new high, a new low, you bought, and what you're waiting to see is that you're waiting to see that when this level has been broken, you're waiting to see a strong or positive confirmation of a retest. Right? If you're looking at what price has done in the past, you can see pretty much here's a nice level of resistance. So you decide to break, you got some movement here. You could have entered a buy, you might have some small drawdown, but what is happening is that you're basically starting to see that, while you had a nice uptrend starting to form here, you may have tell yourself, all right, I've done a buy, gone up. You had some continuation of the buy, even though this is a level of resistance, but you've seen some choppy movement, and the market decided to push past it and keep its momentum moving higher and higher. So having seen that, you're realizing that the momentum for this uptrend is staying, and having multiple opportunities where you could continuously find areas to buy and sell. I mean, continue to buy with the uptrend, right? So you're finding a nice smooth uptrend. So every time it broke this level of resistance, became support, you had an opportunity to buy. It came back and retested along a trend line. It started creating a trend line, you had an area to do a buy again. Came down and respected the trend line, you had areas to do a buy again. And this is how we can successfully trade alongside or using the trend. And it's only upon, you see, like why we had this very strong trend line right here, you'll see that finally it was broken. And then, like I said, we saw in the past where we had the RSI, different indicators, that we got strong indication that this downtrend, this apparent uptrend is over, and we're moving into new territory. So so that is it. So once it is you practice it more, like I said, the academy is there for that. It will give you the opportunity to go at your convenience, to continuously look at it, for you to continuously look for areas of support and resistance, And that's where it starts, from simply just drawing some lines. Like I always say, some horizontal lines, some other lines, that you have the ability to continuously find more and more opportunities, more areas of support, more areas of resistance, that will help give you a guide, or at least give you a sharper confirmation of when to enter the market, when to do a buy, when to do a sell. And all this goes with trading with the trend. Right? So once you trade with the trend, as you say, a trend is your friend, everything will come into play. Right, so that's pretty much it, guys. I don't want to take it for too much longer. I believe we have an opportunity call before the night is over, and what I'd like to do is just kind of hand you back over to Christopher just to close the chat. Maybe if there's any other questions or anything people might need more clarity on, you could just shoot a question quickly for me to address it, and we could always touch on it at a further time or address it now. But if there's no questions, there's nothing else anybody want to ask or add, I'll just hand it back over to Chris. All right, so Chris, you there?
Yes, sir. Powerful information, Sean. Very powerful information we would have received here tonight. I want to thank you, Sean, for taking the time really to share with us on this call all the nuggets of information that you would have just shared with regards to all the confirmations that we would use in order to guarantee a better entry point when we're looking to make these trades. I know, guys, that the information that you would have seen, it would have definitely given some value to your trading skill, irrespective of what type of trader you are, whether you are a day trader, whether you are a swing trader. These four confirmations, together with the relative strength index as well as the moving averages, we could definitely use these particular indicators and confirmations before we really place a trade. Because, guys, as we say, the market, it actually knows or it speaks a particular language. We just need to understand what it's saying. And as Sean really rightfully pointed out, is really drawing of a couple of lines in the first instance could really definitely help us to really determine an upward or a downward trend in the market. And really and truly, I know that it was definitely a great value tonight that was shared here on this call. As Sean always say, and as we always say in all the training sessions, we're really not trying to reinvent the wheel. We have a lot of information on the IML Academy, as Sean mentioned, also in the technical analysis. You would get some further, be able to listen to it some more with regards to these four key confirmations that you can use in order to really identify a very good entry point when making a trade. So really and truly, guys, we want to thank you for each and every one of you for really taking the time out to actually be on this call. We're looking to actually start back. I'm seeing that we have a number of individuals who, where I'm seeing we also had some people from Jamaica as well as some of our team members from Texas on the call earlier. And it's really giving me an idea as to if these Zoom calls may be more effective to actually help and reach a lot of more of our team members who may not be able to actually be a part of the physical training session. So it's something we would discuss in the leadership with regards to the way forward with this particular forum, because I'm seeing that we are reaching a number of our team members, and it's really to add value to the overall and the entire group, because really and truly, guys, we are the Billionaire Trading House. We are really concerned about the after sales support that is given to each and every one of you who partnered with us in here in the Billionaire Trading House. And it's really, we have your best interest at heart. And I really want to know, just before the end the call, we actually, I know that you all would have seen certain things taking place in the chat recently with regards to individuals having issues and really bringing it up in the chat, and really us having to actually address it in a certain way. And great leadership is not about being passive. And sometimes, when you're leading and dealing and treating with individuals, we all have different personalities, we all have different opinions, and everybody's opinion is valued in the Billionaire Trading House. And really and truly, I just like to reiterate on this call that we are definitely wanting to assist with any issue that you may have, anything that you may be having a challenge with in iMarkets Live, anything that you may need further clarification on, any assistance with. We are definitely wanting you to reach out to us personally to really bring some resolve to any issue that you may have. So it's not really about actually not having individuals post anything negative. The reason why we are asking for it not to be shared in the Billionaire Trading House is that we have a number of impressionable minds there, people at different developmental levels where their trading is concerned. And not everyone would actually understand certain things that may not really be an issue. So we really ask for that issues and negative things that you may face, that you could actually send us a message privately, and we will definitely do what it takes to actually get it rectified. So it's really not to actually have you all not bring up any issues at all. It's just that we try to have that particular environment as positive as possible for new and upcoming traders that we are really trying to assist. So guys, really wanted to address that issue. I really want you to know that from my heart, I really love each and every one of you in the team. and that we are definitely wanting to actually give and provide a type of 100% support that you all need in order to continue having a successful experience, trading experience. So with that being said, guys, again, I really want to thank each and every one of you for taking the time out of your busy schedules to be on this call. Really and truly, we appreciate you. And we encourage you to continue working hard, continue applying yourself to the IML Academy, to the IML TV sessions, and also to our training sessions weekly here, where we are able to definitely give you some more clarity. So, guys, we have an opportunity call tonight with Dr. Luke Quamina. I would send out the invitation in the group just as a reminder to everyone to be on that call, share that opportunity with your top prospects as we continue to share the benefits of iMarkets Live with the people of the world. So, guys, you all are looking forward to the next session. And everybody, I hope you have a good night and God bless. We see you on the next session. Take care.